Hey, what's going on, everyone? Welcome to my YouTube channel. Every Tuesday I release a tax strategy video for you guys. So make sure to subscribe or hit the like button if you like the content. Today we're going to talk about 2022 year-end tax strategies. This is the list of strategies that I'm going to go over right now, but good news is that we try to timestamp everything. So make sure to check out the description. If you want to jump to a certain strategy, we've got timestamps on the below, as long as other resources. Okay, so let's kind of get going for this. Now, one of the things that you can plan before year end, right, is PTET Tax Strategy. I'll talk about that. Prepaying your expenses, asset purchases, only assets that you need, right? HSA, solo 401k, last minute S corporation election. For those of you that are not an S corporation, I'll talk about exactly what the steps to take to become an S corp. Loss harvesting, when you have a lot of losses in the stock market, right? A lot of people took a hit on that. So we'll talk about that, and crypto loss tax strategies. These are the 8 that I want to talk about today. And let's get right into it. Ready? Let's go. Okay, cool. So PTET tax strategy. Okay, so see if I can do something about it over here. Okay, so PTET, right? PTET. All right, so here's the thing. PTET is a state business tax. Okay, what happened is that in 2018, when the tax law changed, before the tax law changed, you were able to deduct your state income taxes, right? So let's say, for example, you paid $40,000 in state income taxes. You were able to deduct that on your personal income tax return and got a deduction for it. After the law has changed, you can only deduct, right, $10,000. Not more. So if you have real estate taxes, let's say you own a home, you paid $7,000 in property taxes, and you paid $40,000 in state income taxes, $47,000 was your deduction. But now they limited it to $10,000 only. Now, let me tell you what happened when that law was passed. States were outraged. Like, what do you mean? Our constituents cannot write off what they pay in state income taxes, and they tried to come up with all the tricky ways to make sure it's deductible. IRS didn't allow it. Until one genius came out and said, you know what? Why don't we create a PTET tax? Pass-through entity taxation. So that means if you have a pass-through business, such as S corporation, partnership, LLC, right? What happens is that you're going to pay a tax, and it's a voluntary tax. The state is not making you, but the state is giving you an option. They're like, you know what? Just for this purpose, guys, we're going to use an example of $40,000, okay? That your state income tax is $40,000, okay? You cannot take $40,000, but the state said, you know what? What if we, instead of charging you personal income tax on your state, right? Because you, as a resident of your state, pay personal income taxes. The government says, no, how about we charge you business $40,000, right? We're going to create what's called a pass-through entity taxation. This is a voluntary tax. And some states require you to elect, right? To choose to be taxed, right? You need to make an election. Now, here's the thing. If you pay PTET tax, the business tax of $40,000, right, on your personal income tax, there's going to be another $40,000 tax. But your state says, you know what, don't worry, we're going to give you a credit, right? So 40 minus 40, that's 0. But what does that give you? That now, instead of being limited to only $10,000, because this was a business tax, right? Business tax, this now becomes a deduction, and no $10,000 limit. This is what we're doing right now for all of our clients. Remember what I say, if you guys have a tax preparer, you do not have a tax planner. Now, what you need to make sure as an individual, number one, make sure that your accountant knows about the PTET tax. Pay this tax before December 31st. Some states, like in New York, I'm in New York, require you to make an election, which most states actually require you to make an election, but some states have a deadline, and New York has a deadline. They're like, hey, if you didn't apply by March 15th, you're missed out. So right now I'm shooting this video in 2022, right? So if a taxpayer did not elect before March 15th of 2022, they cannot pay the PTET tax, okay? Some states, don't worry about it, just make an election with your tax return. Some states don't have an election, right? Depending what state you're in, definitely take a look at that. For all of our clients, we actually have a list of states. We'll look at it and we inform them, hey, you need to make election no need to make an election, but need to pay a tax, because this is like an easy deduction, right? So if you have not planned for your PTET tax strategy, that is the first thing you need to do right now. No need to wait. Pick up the phone. Well, finish watching the video, right? Pick up the phone and call your accountant. Okay, the next thing is prepaying expenses, okay? Now, I keep looking over here because I'm waiting for my wife and my little daughter to come in. Anyways, cool. So, prepaying expenses. Now, you're allowed to prepay certain expenses. Now, which expenses can you prepay, right? Basically, there's a safe harbor. Even if you are a cash basis taxpayer, you can prepay some of the expenses, okay? The biggest one that we have seen that works for our clients, not going to go into all of the prepaid expenses, but the biggest one that we have seen is rent expense. Are you allowed to prepay your rent? Yes, you are, up to 12 months, okay? Now, here's the thing. Prepaying rent expense is not as easy as just, hey, let me just go ahead and prepay it, right? I would say you need to know a few things. Number one is that if you're going to prepay your rent in December of 31st, well, you're not going to get the same deduction next year, right? Because you prepaid it, unless you're planning on prepaying it again next year in December. So what you want to do is do it strategically. Like, what's the number one reason you want to prepay your rent? I would argue, and I would recommend, if I'm doing this for my client, I would say, you know what? The reason I would want to prepay the rent, if you're in a higher tax bracket this year than next year. For example, it is very well known, it is very well common, I should say, that sometimes a client gets lucky with a certain client or with a certain account. They close a big account this year, pay them a lot of money. They're going to be in a big bracket this year than next year, right? So let's say this year you're going to be 35% bracket. Next year you're going to be 25% bracket. Makes sense, right? So really bracket planning, I would say. Okay. Number two, QBI planning. In my other video, I think part 3 of the 15 write-offs for the businesses, I talked about QBI deduction, right? Now, if you are one of the specified service trader business, doctor, attorney, accountant, or certain consultant, right? You're good. Okay, they came. A certain consultant, okay? So you can actually, if you're making over a threshold amount, let's say married individual over $400,000, you do not get a QBI deduction. But if you're like at 450,000, you want to decrease down your income, right? To do some QBI planning, what expenses can we prepay? Again, usually rent is the biggest one, right? People pay $5,000, $6,000, $7,000 rent a month, or maybe $3,000, whatever your situation is. But if you prepay that, you can definitely bring that down. That is an awesome strategy, by the way, ladies and gentlemen. This is good. Now, you might say, well, Boris, my landlord is going to be pissed at me, right? My landlord is going to be like, hey, if you're going to prepay me right now in 2022, I have to pay taxes on that 2022. Tell him not to worry, okay? What you want to do is that on December 30th or December 31st, right? Let's say December 31st, drop a check in the mail. Drop check in mail. Don't pay electronically, right? I pay my rent electronically, but if I want to use the strategy, I don't want to pay it electronically, okay? I'm going to drop the check on December 31st. Because I made the check payment on December 31st and it left my hands, IRS allows me to take that deduction. Your landlord is probably not going to receive the check until January 5, right, of next year, which is 2023. When do you think he's going to report an income? Not on December 31st when you wrote down the check. No, he didn't receive it until January 5th. Guess what? It's the same thing for him, whether you paid it every month next year or prepaid it, right? So you can put him at ease, okay? Cool. All right, that is the rent expense. The next thing we're going to talk about are asset purchases. Now, I want to give you a big caveat. I am not recommending, by all means, to buy assets in your business that you do not need. But if you buy assets that you do need, you're going to get a nice tax break. Why is that important? So I'm going to talk very quickly about Section 179 and bonus depreciation. Okay? Yeah, so Section 179 and bonus depreciation. Let's see. All right, I'm going to talk about Section 179 and bonus depreciation very briefly. We have another video on the YouTube channel where I go deep into discussing 2022 planning for Section 179 and bonus depreciation. That'll probably come out next week, I'm thinking. Yeah, now that I'm planning my my videos, right? But here's the thing. So asset purchase, you have to understand something, that bonus depreciation, right? Let's start with bonus. Bonus depreciation is 100%. That means any asset that you purchase, you can deduct 100% in your business. Now, this bonus depreciation is going away in 2023, and it's now going to be only 80%. So if you bought something for $100,000, instead of taking a $100,000 deduction, you'll be able to take $80,000 deduction. But not to worry, because you also have Section 179, right? Section 179 allows you to write off any assets 100% up to $1,080,000, okay? Up to $1,080,000, okay? Which is good, right? Which is good. So should you worry about bonus depreciation going away? Depends in most cases what assets. But if you need to buy a vehicle for your business, let's say you know certainly that you're gonna buy a new car, a new vehicle next year, for certain, you need it, right? Then I would say that if you want to use advantage of the bonus depreciation, and your vehicle, right, is going to be over 6,000 pounds, you're going to get 100% deduction in 2022. Okay, you're going to get 100% tax deduction in 2022, because Section 179 will not allow you. Section 179 has limits on how much you can deduct on vehicles, right? The $1,080,000 that I said, up to $1,080,000, that's on other assets, not including vehicle. Vehicle has a limitation, all right? So with that being said, so you want to be planning, and do not buy assets. I know you guys probably watching some videos, TikToks or YouTube shorts, buy assets, or people call it their accountants. What should I do? Buy a car. Somebody ends up buying 15 cars, right? And then they sell them in 3 years, pick up everything as depreciation recapture. So please, only buy assets that you need. If you need a vehicle, and you know you're gonna buy it next year, buy it right now. If it's more than 6,000 pounds, you're gonna get 100% tax deduction. Okay, that's that. The next thing is an HSA. HSA is a health savings account, okay? This is like a retirement account on steroids. Now, what do I mean by that, okay? Now, HSA allows you, right? HSA is like I said, health savings account. It's just like your savings account, but only for medical purposes, okay? Now, first of all, you have to have a high deductible plan to qualify. Now, most of you might have high deductible plan, but you have to take a look at your health insurance and make sure they allow you, right? They allow you to have an HSA. I have a very high deductible plan, but my health insurance carrier does not allow HSA. Okay, they do not allow HSA. So, but if you're a married individual and your health plan does allow an HSA, you can put away $7,000. Now, how does this work? HSA, health savings account, is just like a savings account, right? But it's for medical purposes. So you open an HSA account with any bank. They have such an HSA, right? Most of them do. You open a bank account for, say, it's like a savings account, and you put money in there. You can put $100, $200 a month, whatever you want, up to $7,000 if you're married. No, I'm sorry, it's $7,350 actually. $7,350 if you're married, okay? And you take this as a tax deduction. And the next time you go see your doctor, right, and you have to pay copay or you buy medication for yourself, you use your debit card from the HSA account to pay for it. Now, here's the awesome part about this, right? This money right here, it's invested in financial institution, so it grows, right? They might be investing it in stocks, securities, whatever that is. If you put in $7,350 and it earned $8,000, it now earned some interest or whatever, it is now worth $8,000. Well, guess what? The difference that it earned is tax-free. Not only is the money going in tax deductible, but it is tax-free. This is a great strategy for you to use when you are young. Why? Because the money that goes in there, it gets rolled over and rolled over and rolled over. So when you're putting money away every year, you can do that, right? And everything grows tax-free. Now, before year end, you can set up an HSA account individually. If you are a business owner and you have an S corporation, right? Unfortunately, you do not qualify for it as a fringe benefit. So do not set it up as on a business level. Set it up on a personal level, okay? It's a personal deduction. That, again, you can write off $7,000 and any money that grows tax-free. Solo 401k. If you are, right, if you are a solo owner of the business, you don't have any other employees, okay, you can open up a solo 401k, whether you are a Schedule C filer or an S corporation. Solo 401k will allow you to put away up to $61,000 into your solo 401k and take that as a deduction. A portion of it, at $20,500, if you're under the age of 50, has to be deposited before December 31st. Okay? The rest can be deposited a little bit after, right? Going into the next year. So definitely look into the solo 401k, because that's an extra $61,000 deduction for you. Again, if you do not have employees, right? Now, spouse doesn't count as an employee for this purpose. So if your spouse works with you in a business and receives a paycheck, for example, then guess what? You can do up to $61,000 for your spouse as well. Last minute S corporation election. I speak to a lot of business owners, and especially when it comes to like year end, right? And they're like, hey Boris, can I make an S corporation election right now? It's December. Yes, you can. Okay, just have to be very careful. What do I mean by that? Let's say, for example, it is, December 1, and you want to file an S corporation election. First of all, you have 75 days to file an S corporation election in the year that you want to be an S corp. So if you want to do an S corporation election this year, you have until March 15th. So you missed out. So what you need to do is have your accountant or your tax advisor, hopefully you have a tax advisor and a planner, not a preparer, file a late form 2553. Okay, that's an election. Okay, that's an election. Now, IRS will grant you a late election because they have a safe harbor. You just have to put it in a certain language. Hey, it was not my fault. I didn't realize, all that good stuff, and they will grant it to you. Then, right, you have to figure out what is your reasonable compensation. Let's just assume for this example, you've got a $200,000 net profit from the business, right? Your reasonable compensation came out to $90,000, okay? Your W-2. Now, if you do not become an S corporation, you're going to pay self-employment tax on the entire $200,000. If you do become an S corporation and you take a W-2 salary between December 1 and December 31st for $90,000. Now, what's going to happen for this on a $90,000? First of all, you have to set up payroll very quickly. Okay, register your payroll and take a W-2 salary. You have until December 31st. As soon as you process payroll, right off the bat, the taxes that you're going to pay are payroll taxes, which is the Social Security Medicare tax, which is 15.3%, which is about $13,500, right? So you're going to end up paying $13,500 about right away on the $90,000. But it's better to do it right now than not being an S corporation and paying 15% on a $200,000, right? Like the Social Security has its max or whatever. But yes, this is how you do year-end election. You make a late election, you make sure you do payroll, W-2 paycheck for yourself, $90,000. And if you have enough cash flow, pay tax, federal and state income tax on a $90,000 if you haven't made any estimated tax payments during the year. Please, this is important. Can you make a late S corporation election? This strategy right here on the $200,000, that will save you approximately $8,000 or $9,000 in taxes right there, okay? Now, loss harvesting. What is loss harvesting? If you have invested in a stock market this year, right, you probably have a lot of losses. But if you have gains from the past, right, before you start investing this year, right, because our stock market took a hit, what you can do is basically, number one, sell assets if you're planning on selling it, right? Sell your securities, your stocks that have a gain. And then sell stocks that have a loss. Okay? Now, why do we want to make that recommendation or follow this strategy? Because IRS allows you, if you have a loss, overall no gains, they allow you only to take $3,000 in losses every year. So if you lost $100,000 in a stock market, IRS says, no. You get to only deduct $3,000. The rest gets carried over indefinitely until every year we take a $3,000, unless you have gains, right, in the future years. So, or if you have gains being carried over from prior years and you have some great gains this year, sell your stocks if you're planning on selling it, and that's what's called loss harvesting. Think about that, right? Now, the $3,000, you might say, Boris, why is this so low? Because this number was never adjusted for inflation since like 1980s. Okay, I don't know. They adjust everything else for inflation, but not this. Okay, so definitely check that out. The next thing is crypto loss strategies. Now, we have this rule with the securities, right? With stocks, right? So let's just write crypto here. Now we have this rule with regular stocks. So if you sold a stock and then bought it within 30 days, right? Should do an error here, right? Sold it and bought it within 30 days. Any losses that had happened, right, from this sale, and from this sale, let's say it generated losses, you're not allowed to take those losses. This is called wash sale. IRS says, no, we know what you're trying to do, right? You're basically approaching December 31st. You're like, oh man, I've got these losses I can take. Let me sell it and buy it back, right? So let's say you bought the stock for $100, right? You bought a stock for $100 originally. Okay, you sold it for 70. And within 30 days, you bought it back. You bought it back for, let's just assume again, $70. Let's say you sold it and you bought it back. You're like, okay, great, I've got a $30,000 loss. I'm going to take that loss against my other gains. IRS says, no, this is considered wash sale. We know what you're trying to do, but crypto does not follow wash sale rules. So if you own crypto in your portfolio and you've got gains coming in from somewhere and you want to take some losses, guess what you can do? You can sell your crypto. Like for example, if you bought, let's say, Bitcoin for 60,000 and now it's worth 20,000, sell for 20,000 and buy it back for 20,000. You still own it, but now you've got a $40,000 loss. If you want to do that, it doesn't follow the wash sale rules. Really, really cool strategy. Definitely speak to your advisor about it. Please, ladies and gentlemen, this is really, really important. If you like the video, hit the like, hit the subscribe. We have resources on the bottom. We also have timestamps for these babies. Let me know if you have any questions. Leave them in the comments. Thank you so much.